The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials flat. You get the NASDAQ off 15, S&P's off 2.5. Gold contract down $3, trading at $13.12 an ounce. We have silver down 11 cents, $15.31 an ounce. Light sweet crude flat, $59.93. That baby's just laying at that $60 level.
It's been a little volatile in both ways, too.
It has. Notes and bonds,
right.
Guess what? This is like, what was that Bill Murray movie? Every day I feel like I'm
Groundhog Day?
Right, saying the exact same thing, man. Higher price, lower yield. And this is pretty dramatic, folks, okay? You talk about a fast move. This is an extraordinary fast move. Now, my take is we're on an ABC structure, you know, down on yields, up on price, but this is happening fast, man. We're at 2.372 right now, so pretty amazing. It's a straight line move. You get the King Dollar. King Dollar still battling out here between the Bulls and the Bears, up 155, 96.380. The euro's at 112.58. The yen's trading at 110 and a quarter, and you get the pound at 132.11. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Think or Swim. And don't forget, folks, every trading day here, you want to understand options, option strategies, futures, outstanding program, 11 to 12 Eastern Standard Time. If you haven't test-driven yet, the Think or Swim platform, real easy to do. Come over to our website at TFNN, hit that banner, bring it up. It allows you to trade with paper money. You can follow Kevin and his team every trading day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Happy Wednesday, guys. How we doing?
Happy
Morning,
Wednesday,
Kevin.
No doubt. You know, these S&Ps, I mean, well, actually, in the NASDAQ futures, man, you talk about bouncing around 40 points in about a heartbeat, man. It's like...
Yeah, I mean, you know, there's a little... You know what I think there is? I think there's a lot of speculation on what's going on with this market. You know, here's what I think in a broad brush scenario. Lower rates and 2.37 on the 10-year is kind of crazy, actually, how low these rates have gotten. That puts a bid below this market for stocks, you know, in a macro level. It puts a bid below the market. Just like when there's rising yields and lower bonds, it puts like an offer above the market. And that's what I think this market is digesting right now. Remember, we got GDP tomorrow. We got income and outlays on Friday. So bonds, you know, could get a little move one way or another off of those numbers. But where we sit now in terms of the 10-year, you know, 2.37, that is low.
It's amazing.
Free money, baby. Free.
Well,
yeah.
You know it's amazing, right? And as you hear us, you know, running down this market every day, folks, right? There are so many different pieces of the market that can actually either bring it down or bring it up. And you make a great point that the bottom line is, folks, is that what ends up happening, if you're a fundamentalist, what ends up happening is that you get lower rates, that's lower cost of money. That means that bottom line is that, you know, the PE is running, like, let's say, an average of 14.5 now or something. But that makes a difference because that's what's the cost of money?
Cost of money, yeah.
You know, what do you need it for? What are you pushing it out for? And what kind of growth can you get with that cost of money? So it's getting intriguing, man. This is a fast move, though, Kevin. You know, I mean, it just really is. It's and it doesn't look like it's going to stop.
Friday's move was pretty aggressive on the downside, right?
Yes.
When the yield curve inverted, it came from some European data that was out, made our yield curve invert, and the market got a little shaky, but it firmed up. Right at the end of the day, it opened up lower on Monday morning, and then we were up back and off to the races on the upside Monday morning. Tuesday, you know, a good, solid, strong update off its highs, right? It spiked higher in the late morning and then kind of drifted from there. So This market is going through a lot of data and figuring out, does it really have another leg up? And I think as we get to, you know, some of this economic data, and very soon we're only 3 weeks away from next earnings, which, let's face it, guys, expectations for earnings next quarter, this past quarter are pretty low.
Yes, they are.
So expectations are going to be low. What does that look for? Well, maybe expectations are a little too low going into this next season. That's the tradable event there.
No, it is. And what happened this past earnings season, folks, is that most of the companies come out with great earnings. When they got hit saying, okay, what's happening in the next quarter? And,
right, lower guidance.
Hey, so what do you think about the announcement with Apple and their deal here?
I think, there is so much uncertainty and dust that needs to settle in the whole content business and who's delivering content and who owns what content.
Yes.
I think we joked on the air the other day, Tom. I think the person I'd rather be in this was Fox, who just sold all their content and let this battle go on without us. Because between Netflix and Apple and all the big
That's a great point,
rivals in terms of cable, this is going to be an epic battle. And people are going to be, you already saw some of the things with Netflix and Apple. Netflix just kind of threw their Scud missile at Apple saying, we're not going to go on Apple TV with our product. They want their product and their customers on their platform. So I think this is going to get a little dicey here with some of these names. I think, the original speculation on Apple going into the number was pretty high. Stock's kind of trailed off since then as people realize this is going to be a long, drawn-out battle here, and it's going to cost money to do it.
It's literally every FANG stock, right? When you think about it, like Facebook videos, right? Content for sure.
Right.
You have Google with YouTube. You have Apple. You have Netflix. You have Amazon. They're all producing original content. It's pretty, yeah.
And think about it, Tommy. When Netflix started, they got such a great head start with other people's content.
I know.
Yes.
Now their own content, which they're doing now and they're all in on, that costs more.
Yeah.
And with that, there's hits and misses in original content where they were cherry picking really good content to start with. Now it gets a little harder, I think.
It's remarkable they made that pivot from basically just mailing CDs to transitioning to an online. It's just a lot of people could have been in that business, as in they made that pivot, and look at the company they became. Yeah.
And
boy, they have such a stranglehold on.
They do.
On the
I agree.
it's
names. Yeah.
And what we haven't heard of, right? So picture, when you go back, you can go back 5-10 years, it doesn't matter. You had the big studios, let's say Fox, Universal, all these. That when they make high-end things, they, you have some major flops, and that's big money.
Right.
Now that's going to happen in this business. So it's like, okay, who's spending the money? And then who has the flops versus, it's pretty intense, man.
How many Netflix shows do you really know when they spend $10 billion? So you don't know a lot of. I don't either. But you find,
yeah, pretty wild, man.
Right, and for the one hit, you may get 3 or 4 misses.
Oh, big time, big time. It's a brave new world, man. There's no doubt about that. And
there's a lot of dust to settle in these names, that's for sure.
Yeah,
there is.
I love Apple, and it'd be tough. We'll see if they can pull me into their content. Amazon has great.
I would fully expect Apple to do a very good job of it, and you saw the rollout. They had big celebrities on board and big directors and, people going to make original content. But,
Spielberg,
not for sure, that's for sure.
Doesn't get much bigger than Spielberg. We'll see.
E.T. call home.
Let's do it.
Phone home. Right here, folks, 45 minutes from now, you want to understand option strategies, futures, outstanding show. Kevin, you have a great one, safe one. We look forward to show in 45 minutes.
Thanks for having me on, guys.
Thanks,
have a great
Kevin.
day.
Stay right there, folks. Tommy and I come right back.
The Taz Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now up 50. Get the NASDAQ trading up. No, actually, NASDAQ's flat.
Yeah.
S&P's up 2.5. And let's go over that. Let's see. Look at that gold contract for a second. So
9:40 this morning.
Yeah.
About almost 40 minutes ago, we went from about 13.16 down to 13.10 on a 5-minute basis. There you go.
Yeah, it's a good pop down, isn't it?
Yeah.
No, that's interesting because we do have a high volume low there, but it didn't break the swing from 4 days ago.
So Friday, okay.
Yeah, so we'll see where that baby shakes out.
Speaking of commodities.
Oil, right?
That's right.
Oil.
We get some volatility going on in oil as well. So we're at 10:19 a.m. We get the crude oil numbers at 10:30 a.m. And just pulling this back to even yesterday's action, early in the day, we climbed above 60 bucks. You saw early this morning, we trade down to a low of about 59.45, back up to 60.20, and we're trading right at $60. Nice thing, jumping over Nadex, $60 happens to line up whether you want the 11 a.m. expirations,
Pretty good.
the noon expirations,
Okay.
or we're going to get the 2:30 expirations. So this will be nice. We'll jump through and hopefully it stays right. We're within 2 pennies right now at $60. So we're going to look at setting up two sides of the trade, right? Volatility, maybe exposure on each side. You have the contract trading at 60.02. This would be your bullish spread for 11 a.m. from 60 to 61.50. You got about 3 pennies of intrinsic value there, costing you 17, and vice versa. Same thing, 11 a.m. expiration, $1.50 to the downside. You're selling that one. The only difference between the two being that you have about 3 to 4 pennies on the bullish side, and so you're looking at about $30,
Yeah,
which is 30 cents, right, away from 60 bucks.
Pretty good.
For your 11 a.m.s.
Right.
Okay, jump to the noons.
That's pretty cool, man.
Yeah, not bad. And let's just see how much more they're going to charge you.
See, it's been laying here at this 59.60 for 5 days now, so this is interesting, man.
Now this is where, okay, so about 21 on the bullish, and that's and the bearish is gonna be a little bit cheaper as we tick back. 20. Let's just 20 and 20.
It's not bad.
$40.
No,
So you're looking at 40 cents till noon.
Right.
Now these you have $1.50 on either side, right? Now the daily is going to be a big one that you're going to have $5. Not bad, because you're not going to have to pay a lot of premium for that extra $3.50. Most of what you're paying for is the ability to hold that until 2:30.
Yes.
Here's your bullish trade.
27.
Now we're trading right at $60, so this is actually all premium. So I already know the bearish one's going to be the same exact price, right?
Right.
We'll pull it up, but it better be. As in
5.4 cents.
Yeah,
5.5 cents.
27. I can already tell. 60 minus 73. You know, 60 minus 59, 73, 27. Right. So you're looking at 54.
Pretty cool.
Yeah. Till 2:30, and you got over $1.50 because by 2:30. Oil could potentially move more than $1.50, so
Right.
it is nice to have, you know, over that level. With EIA coming at 10:30 on the dot, right?
Particularly at this level. So
Yeah.
let's pull up the actual.
Go for it.
If we take a look at this contract, what you're going to see here, folks, we come out with these numbers last night, and yesterday I believe we got the 60.38.
Okay. Yeah.
Right?
Yep, I believe so.
39 is the high.
Maybe it was 37. What was it? 60.38.
38.
Yep, and 39.
39 is the high. Now, the way that I look at this is that, you know, yesterday you did push. You know, we had some good volume. That's 686,000 contracts.
Okay.
Going into 655. So that's telling me that it's going to test that even though it's a penny, saying it wants to go up there. Now, we get a sideways move out here today, so it's going to be interesting, man.
The only I would say is that that's only 30. It's less than 40 pennies away from where we're at, right?
Oh, I know.
Yeah.
But my point is that if you break this, if you break this and with conviction, you can really go.
Okay.
You know.
Okay.
But guess what? This is what's stopping it in its tracks, right? That $5 a day down in oil.
Which is 60.34.
Yeah, exactly. Down
Yeah.
to 55.83.
Right.
You know.
And that would barely cover your cost on the 11s or the noons.
Yeah,
if
no.
you thought you were going to face some. You know, and
There's a seller there. There's
Yeah.
a seller right there.
Yeah.
And in most times, folks, when you're talking about a big move like that, that's a producer. You know, like imagine, you know, you got a nice big bathtub full of
Sure.
oil. It's like, okay, I'll be happy with $60. How many
Yeah.
do you want to buy? And
Yeah.
they're selling forward in the market. This is the exact same thing as selling. You sell
Yes.
forward in the market, you deliver to the market. Guess what? You're all set.
Yes, for sure.
You know?
So let's see. This is the top live that they pull up on
Yeah.
Bloomberg about 10 minutes ahead of time. So let's see what they're looking for. Something odd's been happening in Cushing, Oklahoma. We saw a big rally in WTI spreads this week, and the June-December spread even moved into backwardation. Despite more than 46 million barrels of oil in tanks, inventories have been drawing this month, which is counter-seasonal, given refinery maintenance season. Traders are whispering quality issues gain related to how much deliverable WTI is available.
Interesting.
Yeah. This is going to be an important area to watch in the coming weeks.
So that's saying that, yeah, you have the oil, but how much can you actually deliver the oil that's ready to be basically
And
after the process?
the next
That's
one-
that's where the quality issue
Yes.
comes in.
And the next one speaks to it too, and that's what's so cool about commodities. There is such a fundamental aspect to this,
Right.
you know,
Oh, yeah.
where because we spent much of this past week watching the ITC chemical tank fire,
Oh,
as
yeah.
you saw,
That's a
right?
big
I mean,
number,
amazing. And the reignition and contamination of the Houston ship channel, the closure of the ship channel likely affecting refineries. I expect to see impact divided between today's report and next week's data. That's gonna, you know, you can't get ships through the channel with the oil, right? That's going to affect this number. Now, granted, and there we go,
Look at
right?
that fire.
Yeah. More on the ITC fire from last week. There could be a lot of noise in the import-export figures too, given how many terminals had to shut. That may cause a backup of crude in the Gulf Coast, where we are expecting roughly double the volumes of what we import. Yeah, quite a fire, man. And those chemical fires, not an easy thing to put out, as you see.
No doubt.
Yeah.
So we get 6 minutes. We'll see where those babies going.
Let's just check back. I'm curious if we're still sitting right at that $60 mark as we come in. Yeah, it's just hanging right there, waiting for those numbers. We'll check.
Okay.
Yeah.
Let's go take a look at the NDX 100, the strength versus the weakness inside the NDX. Strength out here is C-Trip, that's up 3.5%. You get Dollar Tree up 3%. American Airlines is up 2.5%, and United's up 2.3%. We'll have to see what's going on there.
Yeah, I wonder. I don't think it would be related. It just brings to mind the fact that Boeing, they're coming out with their update, right? Are they meeting with clients? pilots right now.
Okay.
There's so many things coming out that I lose track a little bit. I know that they're going to come out with the update sometime this week.
The thing that's interesting is that I believe Southwest came out this morning. Oh, look at now, this is intriguing. Southwest came out with a warning, and yet the stock is up. So let's see what
Maybe there was a hidden brag somewhere in that warning.
There evidently is. Let's see.
So I think that's probably what you're talking about, that they see 100 for the hit, at least, right?
Okay,
Revenue hit.
So I guess the market knows what the hit is now, and that's what they're happy about. So Southwest, the largest operator of the Boeing 737 MAX, said the jet's groundings will combine with the soft leisure travel by demand shave $150 million off first quarter revenue. Imagine to get shaving $150 million off a 90-day number.
Yeah. It depends what they're pulling in and revenue, right? I know, but
Yeah.
the figures they deal with are remarkable.
It's pretty amazing, right? There's no doubt. Oh yeah.
That's
nothing.
That's what I kind of figured.
They're talking $5.3 billion they're pulling in.
Everything in the airline business is big, right? I mean, I wonder what the revenue on one single flight is when you think about it. I mean, some of the times, right? You got 250 people paying hundreds of dollars.
Yeah.
That's big numbers on just a single flight that they might have to deal with.
Stay right there, folks. Tommy and I are coming right back with those oil numbers. We have the Dow Industrials up 62. NASDAQ is trading up 4. S&P's up 3.5. Coming right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is trading up 64. NASDAQ is flat. S&P's up 4. And crude inventories rose 2.8 million barrels. So let's see what that's doing to the market.
You got it. And we were looking, for, of course, for a decline.
Yeah.
That's the median analyst estimate. Jumping back to the platform. Nonetheless, so it looks like you did have an immediate spike from the 1025 bar to the 1030, where it gapped lower, right, and opened at 59.86. So you got a 14-cent gap on like literally the second in between the bars.
Yeah.
But we're right back at $60, just like that. Shake it off,
that's
man.
pretty
Shake it
wild.
off.
Okay.
And of course, you know, you should have. We were looking for a decline. We now have more, like 4 million more than the estimate in this. So you got all that extra oil. People should be paying lower prices for the same amount.
Yeah.
Supply equals demand, right? Economics of the curves. But nonetheless, man, oil looking for higher prices, 59.96, and making any of those trades. The last thing you want is $60. Is that your max pain total loss of the investment on either side? But we're a minute into the news, and I would expect we're going to get a little volatility in both sides of it. So there's the breakdown. We see a surplus, 2.8 million barrels. Median estimate had been a decline of about 2.5 million barrels. Cushing was up 541,000. Pad 3 was up 4.5 million barrels. Gasoline, pretty close. Looking for a decline of 3 million, came in at minus 2.8 million. Distillates, a million off, but a decline of 2 versus a decline of 1.
Still cold out there.
So here's part of what we're reading, right? Refinery utilization.
Yeah.
A big miss. They were looking for plus 0.5. You get a decline of 2.3. And I wonder how we see kind of the analysis of this, because, you know, what we saw down here ahead of the news when they were talking about what we're looking for. Let's see, we're down. We'll find it. But they were talking about that as refineries maybe being closed or even getting the oil to those refineries, et cetera. But it looks like plenty of oil, man. Plenty of oil. So they got it refined, right?
I'm telling you.
Yeah.
Let's go to the XLE. You know, the XLE was just going sideways. Yeah, still going sideways. Okay,
Yeah.
so that's having a tough time holding price at all, you know, because the XLE, you know, the market itself is still laying at the October 10th and October 11th downdraft, and this is can't make it by the October 24th level. So that's saying quite a bit, actually. Small caps are still the weakest indice out here, folks. You get a sideways move out here with them today, but we're down 41 cents. NDX 100, we take a look at the NDX. That's a sideways move to up 21 cents. The SPY, sideways move also. What's intriguing out here, of course, is that what we have is that we have window dressing basically on the agenda, really starting tomorrow.
First of the month is Monday.
Going to next week.
Yep.
And then you got Lift Technologies. Lift Technologies is going to do, they're going to price it, what day? Friday morning, Thursday
really?
night.
Okay.
Yeah, so that's going to be the first big ride share that's going out.
And do you know when when they price it, that's not them starting to trade though, right?
That will be, yes.
Oh, that's what you're saying.
So what will end up happening is this. What's amazing about it, once they go on the road, what happened is that they only went on the road last Monday.
Okay.
And by Monday night, they were oversubscribed.
Nice.
Okay?
Yeah.
So what happens is that they will price this out Thursday night after the close. Let's say, I'm just giving you a number. Let's say they price it out at $10.
Right.
That doesn't mean it opens at 10. That means if you had the IPO, you get it at 10.
Yeah.
It could open at 25
If you're
in the
able
morning.
to subscribe to the IPO and you get the shares, right, you get them at 10. Yeah.
What's going to be, what is impressive already, I mean, is that it getting oversubscribed the first day of the roadshow is pretty intense.
Yeah.
You know, the thing that you want to take away from this is as soon as you hear that they are on the road, most times that means that, hey, it's coming any day.
Okay.
And they said
So it's coming, baby.
2 days ago that,
Friday. 48 hours.
Exactly.
We'll have mobile ride sharing trading on public exchanges. Yeah.
Isn't that true?
No, right?
No, I know. I use Lyft all the time. Yeah.
We won't get into why.
Our phone number is 877-927-6648. So, hey, we got to talk about Brexit, folks. Theresa May's got them running now.
Okay.
And what that's all about is that, you know, she kept coming on with these deals, and the political parties that definitely want to leave the UK, you know, kept voting against it because they didn't like the deal. Now it seems that the rhetoric, anyway, that's coming out is that, okay, hold it, we got to do this deal because we're getting so close to no deal
You don't always
whatsoever.
get the deal that you want. That's the nature of compromise. So, you know, That's
So,
that's how government has to function.
It's going to get really interesting this afternoon.
Yeah.
I believe they're going to have a couple votes starting at, I think it's at 3 their time, which is going to be, no, 3 our time.
Okay.
And we'll see where this whole baby shakes out.
Yeah, I'm not sure this.
Imagine being a fund manager. I wouldn't want to be a fund
it's so
manager
tough,
running
right?
over there. Yeah. That's like pretty intense.
Yeah. Yeah, this gets me into more of the fun aspect. I was just trying to see if they had any of the actual just specifics, because there's just so many details going on.
Oh yeah, big time.
Yeah.
Well, I know what we'll do. I'll go UKX. I'll bring. Okay, so under the FTSE. Yeah, no, under the FTSE.
They got a lot going on.
They get a lot going on, but they don't have any of the Brexit news. They're probably too tired of it. Because what has happened, folks, is that the pros and cons. I don't think anyone really has a real handle on, like, are they going? Are they staying? It seems that the parties that want to get out, they're getting closer to doing what she wants to do, but we'll see.
It's a real divisive issue, right? And so and it seems like they're so close to evenly split that that's a battle. And we've seen it that they can't quite come to a decision. I was just looking there as well, not too much. Let's check back on oil. Okay.
Oh, there he goes.
There we go. So that 5-minute bar that we were looking at got us back up, right? The high 60.04.
Yeah.
And then we actually finished that out, closing out that bar at 59.69, so 30 cents, and we're sitting 59.78. To recap, if you're going to do those volatility trades, you have the noon, cost you about $30. I believe you had the 11 a.m. cost you $30. The noon was about 40.
Yeah.
And if you want to go all the way until 2:30 with the $5, that was going to be about 54 cents away from $60 that you would need. So you need more than 20. That's, you know what I mean? As in, we haven't quite got a move.
It's pretty wild. That's
for a big miss like that.
Oscillating around this $60 level, man.
Yeah.
That's a big number. And of course, what's going to happen before we know it is that guess what? You're going to get back into driving season. So oil should have the wind it's back. Coming into, 2 months is May, right? April, May?
Yeah.
April. Yeah.
Well, April's Monday, so it's
My
almost,
God.
right?
Yeah.
Exactly. It's almost like
so,
1 month, yeah.
May 30th in the gasoline market is the beginning of the driving season till basically August 15th or something. So
just some of the analysis out here in terms of the refinery runs we were talking about took a tumble at a time when they have typically started to creep higher after seasonal maintenance. So they must get in that maintenance right after the refineries go crazy, thanks to a spate of fires and other upsets. The Gulf Coast was especially hit hard with crude demand down 294,000 barrels a day. That may have contributed to the 4.6 million barrel increase in crude stocks in the region.
that's a monster.
That is, yeah, and that's what, so, refineries aren't running, right? You got all the crude, and you just got to leave it in crude. It becomes a crude surplus because you can't get into gasoline. There you go.
877-927-6648. We have the Dow up 8. NASDAQ is down 11. S&P's off 1.5. Come right back. If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials right now down 25. Nasdaq is off 21. S&Ps are off 5.5. And, Tommy and I have some fun with this whisper number, folks, okay? And this is the first time this has actually happened, but it's pretty cool.
We're in the top 10, baby.
Yeah, if you're watching Tiger TV, you're going to say, they just came over to us. Congratulations. You're in 8th place in the Bloomberg in the league of top 10 for the United States Department of Energy U.S. crude oil inventories.
So the estimate was a decline of 2.5,
yeah.
And we had guessed an increase of 1 million barrels.
Yeah, right.
Not bad.
Yeah,
we'll take that
pretty
for
funny.
sure.
I know, man. Yeah,
for sure.
You gotta love it. So let's go. I want to.
We have a guest coming up. We have our man Teddy. Teddy Kingston
that's a beautiful
sitting waiting.
thing.
I know.
Okay, folks, you're going to love it, man. We got over to our man, Mr. Teddy Cakestack. You can find Teddy every trading day at forex-trading-unlock.com. And, of course, what ends up happening is that we have been kind of in the same place for quite some time because we are waiting for good old Brexit and Parliament to see what is going on. And evidently something's going on because the S&Ps and everything else is going
We're in the red.
Wild right now. Teddy Cakestack, what's going on, brother?
I tell you what, we have a U.S. dollar bull going on, and we have two currencies I think the whole world is watching right now. One being the pound and one being the New Zealand dollar. Which one do you want to talk about first?
I'm good for any of them, man. Shoot.
Okay, well, why don't we talk about the New Zealand dollar first, because that's more of a technical thing.
Okay.
The New Zealand dollar is making some major lows. It's hitting some key support right now. The dovishness of the New Zealand Central Bank just really slammed that currency.
Really?
So it's a big move. It hasn't moved like this in a while, so it's going to be interesting to see how this is really going to pan out. There might be a bear trend over the next week and a half if it still really hit it hard.
It's quite a daily bar.
Yeah, 69 to 67. Right. Wow.
Yeah, that's like the rug just got ripped out from underneath it when all the other currencies are relatively quiet today.
Okay. And then, of course, I guess the whole world, we're definitely still waiting for, what's going to go on with Brexit here. There's no doubt. And, if we look at the dollar, yeah, the bull and bears, they're still just fighting it out, right?
Absolutely. But I think that right now, if you look at the pound, it's kind of at a neutral, right now it's very neutral on the day's trade. But if you look at the level, it's at a very key pivot level with a lot of tops, okay? So I think that this, right now, it's at a gravitation point, and now we're hanging on this vote. We know that it's finally coming, the chokehold is there for all the politicians to really come and make a decision. Right?
Now or never, right?
Yeah, the chokehold.
Absolutely, it's now or never. So, and I think that the market, no matter what, is bullish the pound. Okay, so if once they come up with a result, I would say odds are if there's a break at first, it's going to be a knee-jerk buy. It's going to be a dip to buy, I would think.
Yeah, right.
If there's not an accelerated rally into new highs, which I think that's probably what will happen. So there's definitely a volatility play. It's not going to hang in this area, that's for sure.
Yeah, you buy the reaction. So what do you think's going on with the euro? You know, I mean, we're getting close to the lower end of this consolidation that's been in for, you know, since going all the way back to what, November, right?
Right, and it's actually been a rather weak, you know, like you look at it over the past couple months, it's really just a sideways trade.
Yes.
If you look at it really over the past few weeks and what have you, it's more leaning towards a bearish move, leaning on support. Now, it's coming into this area where when there's bad news, okay, let's say if the market was getting cracked right now, especially over in Europe, and there was all kinds of bad news, you know that they would be trying to bury the euro. What happens when that happens? They can't get it below 112, 111 half, and that's when there's tons of bad news, you know? So there's really nothing coming out that's really harsh like that. So I think it's more the dovishness that's now settling all around the world, you know, because if you remember when we were talking before Christmas, we had the Eurozone, you know, they dropped all the quantitative easing stuff that they were doing and what have you.
Yes.
And they were looking towards raising rates, which made the euro strong relatively, you know, against the dollar through the holidays and into the new year. Okay? Now you don't have them talking about really going towards raising rates, but they're not being dovish either, you know, but that talk of that, which would be the carry trade. You know, so the carry trade, I think, is completely off the table pretty much in all the currencies because we've had central banks for the past 6 months, including our own, that were looking towards raising rates and spiking things up. Now, all of a sudden, we started to go dovish. We know that tentatively there may be one rate hike in September, but otherwise it seems to be off the table with a very transparent Fed. In my lifetime and trading career, I don't think I've ever seen a Fed that's actually done what they said and said what they did, and in such a short amount of time, and you're like, whoa, this is not like we don't have to second guess them right now. It seems like they're just telling us exactly what their plan is. And if that's the case, the other banks are following that right now. And that's what I think is why we have this slowly grinding bull for the U.S. dollar against all the majors. You know, take New Zealand aside, that's just because of what their central bank did. And I think that's a confirmation for what I'm talking about here is that now they followed suit. So you have the whole global trade zones of central banks basically looking at, they always look to the Fed for what we do, but now it's like they're actually following what the Fed does.
Yeah, no, I agree, man. I mean, this is one of the biggest turns I've ever seen that so quick.
For sure. Yeah.
I mean, you know, all of us go back 6 months, and it's like, okay, you know, the 10-year 6 months ago was at 3.1, 3.2. You're at 2.34 this morning. It's like, okay, like, you know, 30 years are going down, everything's going down, and simultaneously, everyone's going down across the world, and it doesn't look like they're going to be going up anytime soon.
Sure.
You know, so, yeah, a lot of moving pieces, man. And I guess the real question is going to be...
There is one thing that change things. If, like, for instance, they keep talking about the global slowdown.
Yes.
You know, in Asia and in Europe. Now, our economy, no matter, even though they keep trying to say things are slowing down, and all of a sudden the numbers come out and they're like, oh, it's contrary to what the consensus seems to be pushing towards. But then you guys have been in the markets long enough to know that when the market's going up, they're always predicting the sky is going to fall. But when the sky is falling, then they're like, oh, it's about to turn around, right?
Yeah,
you know?
no doubt.
So I think a lot of that is going on right now, but because the markets are not reacting, it's confusing things, and that's causing this like drifting, you know, just kind of neutral trade, especially with the currencies and even the interest rates. Because now, if there's all this dovishness stuff that's going on, what's going to happen to rates? They're going to be in a range.
Oh yeah, and listen, it might take this 10-year wants to go to 2.0 or 2.1, and it's like, okay, man, you know, it's like, what is that all about? Well, it just might be about low rates in a longer period of time across the world.
We start getting earnings in a few weeks, right? And that'll really, we'll see what happens in terms of, do they guide lower again? Do they deliver on, you know, their expectations? Because that could drive some of the fears, for sure.
The cost of money is down, that's for sure.
Yes.
And, that's gonna
the market is always correct, right, gentlemen?
Yeah.
You can't fight it.
No,
I know on CNBC they say the market gets it wrong, but I know that the market never gets it wrong.
They can't, because it's the market, right? Exactly.
All you have to do is look at the bond market. They got it right so much earlier than everyone. It's like, oh my God, okay. I mean, they've been buying bonds since November, okay? So it's like, why? Well, guess what? because rates are going down, you know?
And look at gold too, right, Tom?
Yep, no doubt.
You said with rates, it's the same thing, and we know the cycle of things is first the bonds move, then gold moves, then equities move, right?
Gotta love it. Listen, folks, every trading day you can reach Teddy at forex-trading-unlock.com. Check it out, folks. Teddy, it's always a pleasure, man. You have a great week, safe week. We look forward to speaking to you next Wednesday.
Thanks, guys.
Thanks so much, man.
Thanks,
Have a
Teddy.
great one. Stay right there, folks. Tommy and I are coming right back. We get some selling in the market. We get the Dow down 63. NASDAQ is off 37. S&Ps are off 10. We're coming right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down to 68. You get the NASDAQ off 34. S&Ps are off 10.5. And as you come over to our website at TFNN, folks, you're going to see our man, Mr. Basil Chapman. He is going to be doing a webinar for his subscribers. Great time to do it. We get some volatility in the marketplace for sure. I mean, we've had a sideways market, but the market's trying to figure out exactly what to do. And Basil's going to walk you through what he thinks we're coming up at.
Yeah, a week from tonight. So it's Wednesday, what is it, 27th, 28th, March 27th, 1 week from tonight, April 3rd. I encourage people, check out the opening call. Basil, Trooperman, covering for Larry. Larry going to be back on Friday, as in Basil's been covering for that 9 a.m., and he'll be up, of course, at noon as well. But This is going to be a workshop at 5 o'clock following your program a week from today. And what I encourage people, if you sign up for opening call, Basil has 2 archive workshops in there, just kind of talking about the markets as well from December and October. Very timely as well. You gain immediate access to those. Those are both 90 minutes. So you're talking about 3 hours of archive workshops that definitely apply to like what's going on. And so you can check those out over the next week. Sign up now. Of course, you get the opening call every morning. Basil, I think he sent out 7 charts with analysis this morning to subscribers.
Nice.
Yeah, so check that out, 30-day money-back guarantee. And, of course, you can sign up for $128 for the month, $595 for 6 months, or $995 for the year. All of those money-back guarantee for 30 days when you sign up. So I encourage you to check out the 6-month, the year. And, like I said, 2 90-minute workshops already right on your page the moment you sign up. And then a week from tonight, anything goes, the stock market's key phase, along with, 2019-20, we went over just a number of things. Fang, what's happening with Apple? We'll find out.
Let's find out what's happening with oil before we...
That's right. So 59.75.
Okay.
Only a quarter move on quite a miss, but we'll see, man. The day is young. We'll see.
Stay right there, folks. We got Fast Market coming up next. And, of course, we got our man Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.